Hey, what's up, y'all? Welcome to Array Beats, doing another beat making in crypto watch. Well, actually, this beat is already made this time. It's a beat I made to submit into a contest, and yeah, it's pretty fire. And I'm gonna let that keep on playing through. But first, let's get into what we normally do on this page. Give me a second, let me pull it up here. Let's get to the new. We're seeing a crypto bubble right now. Everything looking green. We're in a very bullish moment at the time. The earlier today I looked in here and it was like red. It was a bloody market. But then we're coming out of those dips. Hopefully people caught those and bought the dips on those cryptos that you like. And once again, I have to say it every time. This is not financial advice. It is pure entertainment and following what we love, music and crypto. But looking in here, we have the Mina is at a plus 24.6%, Hex at a plus 32.7%, Mana Decentraland is at a plus 14%, Sand, the other Binance Gaming coin, is at plus 10.9%. Rakai at a plus 22.5%. Well, we'll be listening on forever, but everything is doing pretty good, trying to get out of those dips that we just incurred. Let's go over to. Oh, I don't see it on there. Let me see. Pick something else here. Here we go. See what's happening in coin market cap. So as usual, as always, and will always will be, Bitcoin at number one. Right now it's up 0.48%. At number two, Ethereum is up 3.44%. Number three, Binance Coin up 4.67%. Number four is Tether up 0.14%. Solana at number five, 1.88%. Cardano at number six, up 1.30%. XRP at number seven. Did I say Cardano? Cardano at six, XRP at seven. I think I said that wrong. But it's at up 2.62%. Polkadot up 3.62%. Dogecoin, a lot of people's favorite, still at number nine, up 4.7%. And something's going on where we can't see these others. But anyway, USD coin, who cares about it, right? You know, it's just a US dollar. We don't care about that. At number 11, trying to sneak his way back into the top 10 is Shiba Inu. And it's not showing me no data. I don't know what's going on with it. But anyway, that is what's going on in coin market cap. And let's get into some of this news. We got some crypto news to share with you. First off, you know I love keep talking about Axie Infinity. I think, like I keep saying, this Binance Gaming is the move, and it's the thing that's on the rise now. So I like to put some money into those tokens that's by backing up those games. And a quick little tip, like I said, not financial advice. Do your own research. But when it comes to getting tokens that are backing up those certain games, also look into how easy is it for people to earn those tokens. If it's a game where people can earn that token just through gameplay and they can earn it quite a bit, it's probably not one you want to just put the money into investing on the crypto, you know, into that crypto coin, because people are getting it. You know, you can get it free playing through the game. Not too many people are going to buy into it when you can just play the game a little bit, and so you just, I don't know. You know what I'm saying? But if the actual game like Axie Infinity and like what is it, Splinterlands, they have a token backing it, and it's a little harder to get. You know, because several other games have multiple tokens. If the token is a little harder to get, then yeah, some more people will probably be buying it actually on the crypto market. Just something to keep in mind. Do some research into it and you'll see what I'm saying. Once you research and you start seeing further in, like, oh yeah, there is a difference, and you better kind of keep your mind open on that. But talking about this Axie Infinity. This news says Axie Infinity AXS retests its previous all-time high as EOS finally climbs. Multiple coin analysis. And what we see in here is this is a article by BN Crypto. It says they take a look at the price movement for several cryptocurrencies, including Bitcoin, which despite the sharp drop in November 10th, is holding above the horizontal support. So that, of course, that's the first one they're talking about here. Bitcoin decreased considerably on November 10th and created a bearish engulfing candlestick. This is the type of bearish candlestick that negates the entire previous increase and more. BTC bounced once it reached the 63,500 support area. The 63,500 level also coincides with the ascending support line. This is likely to be very strong support level. And as you can see, they have a chart where they say this green indicator here. They're saying this should be a good support level, a strong support level. But look into the chart, see where it's at now. This article is actually a couple hours earlier today, so see how right they want to see if they're dead on or they're off a little bit. But we will see. The other one they're talking about here is Ethereum, the good old ETH. ETH has increased inside an ascending wedge since October 28th. The wedge is considered a bearish pattern, meaning that the breakdown would be expected in the majority of cases. Furthermore, it is approaching a resistance level at 4,850, created by the 1.61 external fib retracement resistance level. Therefore, it is possible that ETH will reach a local top soon. So we'll see if ETH jump out there and do something. They're predicting that to happen. Looking at the chart, you see ETH is steady growing. And also going back up here at Bitcoin, this is just this doesn't show the full picture. Like I say several times, pan further out, it's like the year, 2 years. I say go back as far as you can and then look at the whole trend that it constantly goes throughout the time. But this is just kind of a zoom in more currently. If you zoom out, it looks kind of like ETH does here. It's steady climbing. Even if it drops a little, it goes back up. It's steady going up. I call it the escalator effect. Instead of going on the elevator, escalator is cool. Elevator, that cord may snap and you may drop right back down. XRP has been increasing alongside an ascending support line since October 27th. On November 7th, it broke out above the $1.21 horizontal resistance area and proceeded to reach a high of $1.34 on November 10th. While the token increased the same day, the drop served to validate both the ascending support line and the $1.21 area as support. And then once again, it'll be the green icon in the chart below. As long as they are in place, the bullish structure remains intact. And you can see what they're talking about. The bullish structure is steady going up, saying this should be the support line. So we keep bouncing off this support here and keep going up. That's what they're kind of predicting it will do. We'll see. As we see now, earlier today, it was kind of bloody, but we're coming right back up. And that's kind of what's happening when you're seeing the market red. Like, even do like I do watch Crypto Bubble. Don't make that the only tool. Utilize all the tools you have, but that's the main tool I like to kind of look at first. But also look at all your other tools though. But as you've seen, no matter what you looked at earlier, we was in a bloody market this morning. But as of right now, things are getting back in the green, getting back in the positives. Kind of a good sign. You need to see those little dips and then it pops up a little bit. You need that. AXS, the Axie Infinity. And it says Axis has been increasing since the breakout from the descending resistance line and validating it as support on November 1st. The breakout and retest also served to validate the 140 horizontal area as support. The same area previously acted as the all-time high resistance. This led to a new all-time high price on November 6th. The drop on November 10th only served to validate the 140 area as support once more. Therefore, as long as Axis is trading above this area, the bullish structure still remains. So we're still in the bull market. That's what they're saying. So you're saying there's a line here. They're saying that will act like a support. It came down and hit that, bounced right back up. So that's what they mean by that support. And we'll see where that goes. There's another one where I see it constantly growing. You know, and definitely with Binance Gaming being on the rise and Axios leading it. So we have some more here. We'll go a couple more. H-bar, Hedera hash graph has been increasing inside it in ascending parallel channel since September 20th. So far, it has been twice rejected by its resistance line, resistance getting weaker each time they are touched. So the breakout seems likely. We might finally make some money, make a little breakout. You might finally jump up out of this little pattern here and see a skyrocket. So if you're following H-bar, you know, this is news to me. I might kind of keep an eye on to see what happens. This would be something interesting. It said currently the token is also in the progress of breaking out above the 42 cent horizontal resistance area. Doing so would also mean a breakout from the channel and would allow H-bar to increase towards a new all-time high. Let's hope it does so. Hope it does so. Verge token, the XVG, has been trading below the 0.035 horizontal resistance area for 173 days. However, the token has been moving upwards since September 28th. It's currently very close to the fermenting resistance area. Since XVG has been consolidating below it for a very long period of time, an eventual breakout would likely be the catalyst for a very significant upward movement. So that is XVG. Keep a look on that. That would be something. If you catch this dip and catch that big breakout, that would be nice. But if it don't do nothing, there'd be a lot of mad folks. The other one is EOS. On November 8th, EOS broke out from the descending resistance line that had been placed since September 16th. In addition to this, it broke out above the $4.95 horizontal area. This confirmed that downward movement had come to an end. The November 10th drop only served as to validate the line as support, the green icon as you see right here. And furthermore, it validates the $4.95 area. I just read that, huh? As long as EOS is trading above this level, it's likely to move upwards. So this is the line they're saying. They're hoping it stays above that level. I don't know. And that is the last of what we have on that one. We have some more news though. I'm gonna pull it up. A little automated voice. So, you know, it's all right though. It's all right though. It's still the crypto news. I'm gonna let the beat ride. Get my ugly face off of here for a second, and let the news go ahead and play. Rock with me, rock with me. Let me know what y'all think about this beat though.
Record high inflation prompts investors to take a closer look at Bitcoin. Consumers in the United States and around the world continue to feel the pinch of inflation, and recent data shows that the Consumer Price Index, CPI, rose 6.2% in October when compared to last year, a development which further cast doubt on the transitory inflation narrative coming out of the Federal Reserve. Inflation at 6.2% means that if we keep it steady for 10 years, your $100,000 will become $54,800 by then. Compounding is a powerful force. Satoshi is having somewhere right now. Hashtag bitcoinpic.twitter.com/THTSHLF1Y0. David Marcus, at David Marcus, November 10, 2021. As a result of the high print, traditional financial markets took a hit on November 10 as concerns about runaway inflation and the loss of purchasing power weighed heavily on the minds of investors, and major indices pulled back from new record highs that were set earlier in the week. That is in contrast to the price action in the cryptocurrency market, where a burst of bullish momentum sparked a 4.7% rally in the price of Bitcoin, BTC, right as the CPI data is announced. BTC/USDT 4-hour chart. Source: Trading View. The rapid rise in inflation over the course of 2021 has led to an increasing number of calls for the Fed to end its easy money policies and raise interest rates. Many claim that the central bank has pinned itself in a corner and has no easy options moving forward because a rise in interest rates could make servicing the U.S. national debt even more challenging. According to recent statements from former U.S. Treasury Secretary Larry Summers, global financial markets appear to be anticipating slow growth and low real interest rates for the next few years, which will gut the ability of central banks to guide economies. With the control of interest rates being the primary tool at the disposal of the Fed for exerting influence on the market, it appears that there is little else besides continuing to print money that the central bank will be able to do in response to ongoing challenges. Bad for fiat, good for crypto. Cryptocurrency holders are uniquely positioned to benefit from, or at least receive some shelter from, these latest developments because the declining value of fiat currencies like the dollar has highlighted the power of Bitcoin and other altcoins as hedges against currency devaluation and inflation. According to data from Bitcoin Stimulus, Americans who put their $1,200 stimulus check from April 2020 into BTC would now have $12,172 worth of BTC. This represents an increase of 914%. Current value of the $1,200 stimulus check from April 15, 2020. Source: Bitcoin Stimulus. And those gains haven't been isolated to the top cryptocurrency because the entire market has seen an influx of funds that lifted the total market capitalization from $190 billion to $2.95 trillion during the same period. Total cryptocurrency market capitalization. Source: Coin Market Cap. On top of the increase in value for a large number of tokens on the market, cryptocurrency holders have also been rewarded with numerous cryptocurrency stimulus checks in the form of airdrops, like the recent one from Ethereum name service, which created a 5-figure payday for early adopters of the protocol. Overall, participants in the cryptocurrency market have benefited from the protection offered by holding assets that are appreciating in value as the purchasing power of fiat currencies deteriorates, a process that shows no signs of slowing down in the foreseeable future if the rate of inflation continues to rise. The views and opinions expressed here are solely those of the author and do not necessarily reflect the views of Cointelegraph.com. Every investment and trading move involves risk. You should conduct your own research when making a decision.
Yeah, what's up, family? What's up, family? What y'all think about that news about the inflation? It look like crypto gonna be taking over thing. It may be a slow process, but the new world currency is gonna be crypto. For sure, it's gonna be crypto. I might be accepting payments for my beats only through crypto. Hey, keep rocking. We got several other news articles to bring up, and keep letting this beat rock. I need some feedback on this beat. I put it in several other places. Like I said, it's a beat I made for a contest, and hopefully we win this contest. But we see what happened. Well, looking back at the crypto bubble, I'm gonna let the music play a little bit while I bring up this next article. But until then, right now, whatever, losing my words. Make sure you like this video, drop something in the comments, share it so we can grow. Also hit the subscribe so you can get notifications whenever we have updates of new videos coming up. I would be doing more videos going over cryptocurrencies, making beats, and also just putting up some beats that I have that's for sale in my Airbit store. So make sure you do those several things, help the channel grow. I know we're real new right now, but we're gonna get up there. But enjoy this beat. I'm gonna get the next article pulled up for y'all.
Here's why Bitcoin losing $6,000 in hours was good for BTC price action. Bitcoin, BTC, traded just below $65,000 on November 11 after an overnight correction cancelled out previous snap gains. BTC/US 1-hour candle chart, Bitstamp. Source, TradingView. No free lunch for speculators. Data from Cointelegraph Markets Pro and TradingView showed BTC/USD recovering after briefly dipping below $63,000 in fresh volatility. The pair had moved up sharply on the back of US inflation hitting its highest in 30 years, this combining with derivatives market reactions to produce uncertain price action. With $69,000 now the all-time high, some were fearful, while seasoned market participants took the opportunity to poke fun at the weak hands. Why the BTC pullback from 68K? There was a massive increase in BTC margin futures open interest this afternoon, traders going long BTC with BTC as collateral, analyst Dylan Leclerc explained alongside a chart from Glassnode. No free lunch, these traders are in the process of being shaken out. Bitcoin futures open interest annotated chart. Source, Dylan Leclerc/Twitter. Fellow analyst William Clemente pointed to the upcoming Taproot soft fork as a clear reason to be bullish and discard short-term price moves. Taproot will bring a host of protocol improvements to Bitcoin, these having no comparison to any changes since the introduction of segregated witness (SegWit) transaction technology. We in number 39, 3 days away from Bitcoin and number 39's first major upgrade, Taproot, since SegWit in 2017 and people are panicking. Will Clemente, at Wilmon AI, November 10, 2021. Derivatives funding rates meanwhile served to prove that a shakeout had indeed taken place, returning to solidly neutral territory of 0.01% across exchanges. Ethereum avoids deeper altcoin retracement. In classic style, altcoins felt the heat as Bitcoin reversed, erasing what were previously returns that had outperformed BTC/USD. Related, #DropGold worked. Grayscale Flippin's world's largest gold fund as AUM hits $60 billion. Ether, ETH, was the most unscathed on the day, down 0.6% and still a stone's throw from all-time highs. ETH/used 1-hour candle chart, Bitstamp. Source, Trading, View. Others fared slightly worse, with 4% daily losses not uncommon among the top 10 cryptocurrencies by market cap. Crucial at this moment, Bitcoin, Cointelegraph contributor Mikhail Vandepoppy concluded in his latest YouTube update. Where are we going to break through? If we break through that area around $67,000, I think we're going to continue the bull cycle and we're ready for new all-time highs to be hit. Ascending channel pattern at Ethereum options data-backed traders as $5,000 ETH target. Ether, ETH, bulls seem excited with the recent $4,870 all-time high that was hit on November 10th. While it was a new high in USD, ETH price is still 51% below June 2017's price in Bitcoin, BTC, terms, but it's entirely possible that the 0.155 BTC level reached in the previous cycle reflected the overzealous expectations that were rampant during the initial coin offer, ICO, frenzy. The Ethereum network's own success caused congestion and high fees, bringing the competition closer. For example, in mid-2017, the leading competitors would have been Ethereum Classic, ETC, and NEM, XEM, and combined, those represented a mere 13% of Ether's $37 billion market capitalization. Today, Binance Coin, BNB, and Solana's, SOL, aggregate capitalization stand at 32% versus Ether's $557 billion. At the moment, Ether price is trading in an ascending channel with a target at $5,000, but bears apparently still have reasons to doubt the network's ability to deliver ETH 2.0 by year-end. ETH/USD price on Kraken. Source, Trading, View. This year Ethereum's leading use case, decentralized finance, DeFi, gathered regulators' attention and not in a good way. United States Securities and Exchange Commission, SEC, Commissioner Caroline Crenshaw published her opinion on Tuesday in the article titled, DeFi Risks, Regulations, and Opportunities. She mentions that the sector lacks market protections and she raises concerns about pseudonymity and market manipulation. On the other hand, the value locked on the Ethereum network's smart contracts reached a $94 billion all-time high, marking a 42% growth in 3 months. So regardless of the competition or the $50 average transaction fee, there's undoubtedly a growing demand for its DeFi, non-fungible tokens, NFT, oracles and decentralized marketplaces. Ethereum network adjusted total value locked, TVL, in USD. Source, debank.com. What is interesting is even with Ether's positive price action, which is backed by strong usage metrics, bearish put, sell, options dominate Friday's ETH $700 million expiry. Ether options aggregate open interest for November 12th. Source, Byte. At first sight, the $415 million put, sell, options dominate the weekly expiry by 31% compared to the $285 million calls, buy, instruments. The 0.69 call-to-put ratio is deceptive because the recent rally will likely wipe out most bearish bets. For example, if Ether's price remains above $4,700 at 8 a.m. UTC on November 12, only $10 million worth of those put, sell, options will be available at the expiry. There is no value in a right to sell Ether at $4,700 if it's trading above that price. Bears could still tip the scale below $4,600. Below are the four most likely scenarios that consider the current price levels. In addition, the data shows how many contracts will be available on October 20th for both bulls, call, and bear, put, instruments. The imbalance favoring each side represents the theoretical profit. Between $4,500 and $4,600, 7,500 calls versus 13,600 puts. The net result favors bear, put, options by $25 million. Between $4,600 and $4,700, 12,700 calls versus 7,300 puts. The net result is $25 million favoring the call, bull, instruments. Between $4,700 and $4,800, 17,300 calls versus 2,100 puts. The net result is $75 million favoring the call, bull, instruments. Above $4,800, 24,300 calls versus 100 puts. The net result is complete dominance, with bulls profiting $115 million. This raw estimate considers the call options being used in bullish bets and put options exclusively in neutral to bearish trades. Unfortunately, this oversimplification disregards more complex investment strategies. For instance, a trader could have sold a call option, effectively gaining a negative exposure to Ether, ETH, below a specific price. However, there's no easy way to estimate this effect. Ether price may pull back, but $5,000 remains the target. If Ether's price holds above $4,800 on Friday, bulls will net a significant $115 million. In that sense, for ETH bears, taking a $25 million loss should be considered a victory. There's still a chance that bears avoid losses on Friday's expiry by pressuring Ether's price below $4,600 on November 12, down a mere 3% from the current $4,750. Would that be enough to reject the ascending channel initiated 3 weeks ago? Not really, because there's room for $4,500 without breaking the support level. The views and opinions expressed here are solely those of the author and do not necessarily reflect the views of Cointelegraph. Every investment and trading move involves risk. You should conduct your own research when making a decision.
Yeah, shalom, peace and love, peace and blessings. Hope y'all enjoying the news, these updates going on. Hope y'all get something out of it. I like that. There's tons and tons of articles I read, and the more articles you read into what's going on in the crypto world, the more in tune you can be with what's going on. It helps you with your tradings or investings, whichever avenue you take. It kind of helps out a lot the more you know about what's going on in the market. So that's the reason I share these. Anybody can look these articles up, but I'll save you a little time. I can go ahead and show you the articles as I research them and see them. Remember, like the video so the algorithm go up, the channel can build. Share the link. Go ahead and hit that subscribe button so you can get the notifications whenever we put new videos. I know we're a new channel growing, but we're gonna get up there, and you can be one of the ones I was there in the beginning. I seen that man in the beginning. But anyway, we're gonna keep it rocking because I got one, maybe two more news updates. But I'm gonna pull up this other article and I'm gonna let the beat rock for a little bit till I pull that article up.
Doctors Without Borders is now using blockchain tech for medical record storage. At a November 11th press conference, blockchain-based document security company Transcripts announced a partnership with Doctors Without Borders, or DWB, that began on October 14th. Working together, they have already uploaded 6,500 immunization records to the blockchain, with a goal of 76,000 by 2022. Most of the recorded immunizations are COVID-19 vaccines, but the company stated that eventually the goal is to store all patient medical records on the blockchain, where they will be accessible from a patient's phone. The nascent California-based startup was founded last year by Zain Zaidi, then still an electrical engineering student at San Jose State University. The company now counts Paychex, ADP, Zoom, Spirit Airlines and Oracle as its clients. Transcripts began as a tool to combat resume fraud marketed to human resources professionals, before expanding into income verification for landlords. Now, the firm said that it views itself as a full-service documentation service. The DWB partnership is its first foray into medical records. Previously, Transcript had found that HIPAA and other compliance laws essentially barred blockchain as an acceptable method of storage for medical records within the United States. Speaking on the accessibility of patient medical records in developing nations, Zaidi said that blockchain could provide significant help in preventing many unnecessary deaths. In India, over 700,000 people die every year from the lack of access to a patient's medical records. A majority of these deaths could have been prevented if physicians had access to a patient's comprehensive healthcare records. With this partnership, Doctors Without Borders and Transcripts hopes to build a future where this loss of life can be mitigated. This is not the first time COVID vaccination records have been stored on the blockchain. Cointelegraph reported in January about VeChain's launch of a program to do so at a large hospital in Cyprus.
All right, I got one last article for y'all, then we out of here. But this article was just released just 9 minutes ago, so this is fresh off the press. But we'll let this article play, then the music gonna groove out, and we're gonna get on out of here until another alert comes up. Let's get into it.
Analysts say Bitcoin price dips are transitory, suggesting BTC will soon head to $75,000. Volatility is the name of the game in the cryptocurrency market, and the November 11th evening sell-off in the price of Bitcoin, BTC, is a reminder that new all-time highs are often followed by sharp whipsaws to underlying support levels. Data from Cointelegraph Markets Pro and TradingView shows that after dropping to a low near $62,800 late on November 10th, the price of Bitcoin managed to claw its way back up to the $65,000 level, where bulls now look to consolidate and regroup for another push higher. BTC/USDT 4-hour chart. Source: TradingView. Here's a look at what analysts are saying about the outlook for Bitcoin and the cryptocurrency market as concerns about rising inflation dominate the news headlines in the US. Bitcoin dips are transitory. The sight of a rapid $7,000 decline in BTC may have come as a shock to some, but for analyst and pseudonymous Twitter user Nunny Business, the price action over the past couple of days is par for the course and transitory in nature based on Bitcoin's past performance. Breaking news alert: Bitcoin dips are transitory. pic.twitter.com/ddpl8grow. None your business, at Pladizo, November 11, 2021. As observed in the chart below, which shows the Bitcoin price along with its 20-day moving average, 20 MA, it's common for a run-up in the price of BTC to be followed by a pullback that touches or briefly dips below the 20 MA before once again heading higher. BTC/USDT 1-day chart. Source: TradingView. Evergrande and inflation affect the market. Insight into the macro factors at play was provided by Jean-Marc Boniface, head of asset management at Tellurian Exo Alpha, who highlighted the fact that there has been much talk about the impact of the Evergrande story on the recent sell-off in the market. As a way to make the development more relatable to cryptocurrency holders, Boniface stated that the Evergrande news is to equities what Elon Musk tweets are to cryptos, in that it is somewhat manipulated news to move markets. According to Boniface, the crypto markets seem to be overreacting to the headlines, and the recent dip is probably more of a technical consolidation after the sharp rally of the last few days. And it's not just negative headlines about Evergrande and tweets from influencers that are affecting the price action in the crypto market. According to Boniface, the recent 6.2% rise in the U.S. Consumer Price Index, CPI, also points to a major factor influencing the global financial markets and the price of Bitcoin. Boniface said, "The recent shocking inflation numbers in the U.S. should be a supportive fundamental driver for Bitcoin prices, beyond the short-term tactical selling pressure." Related, here's why Bitcoin losing $6,000 in hours was good for BTC price action. Bitcoin is in the process of a necessary retest. A final word of encouragement was offered by analyst Twitter user GalaxyBTC, who posted the following chart outlining one possible trajectory for the price of BTC to reach $75,000 in the short term. BTC/USDT 6-hour chart. Source: Twitter. The analyst said, "Yesterday's retest was needed to continue the bull run in a healthy manner. I think we will start pumping harder now." The overall cryptocurrency market cap now stands at $2.847 trillion and Bitcoin's dominance rate is 43.1%. The views and opinions expressed here are solely those of the author and do not necessarily reflect the views of Cointelegraph.com. Every investment and trading move involves risk. You should conduct your own research when making a decision.
Alright, fam. That's all I got for y'all. Thank you for rocking with me. Like I said, we have any other new updates that I catch an eye on, we'll sure get back over here and let you know what I see. If it's anything significant, hop on it ASAP. Other than that, I'll just take notes, save articles until the next show, and we'll keep it rocking that way. I try to do the most relevant and the most updated articles. There's a ton of articles to read, but it's like they come out every 9 to 15 minutes. There's a new article, so it's kind of like figuring out what's the best ones and most informative for those who are interested in the market. I'm gonna try to look at some more articles on some other things. Like I know people are into some other aspects of investing, so I'm gonna keep my eye out for those too. But also I'm gonna keep making these beats, so I'm gonna let the beat ride on out. That's it for me. Thank y'all for rocking with me. Array Beats, that lines up in here. Shout out to the Pride.